gross receipts declined 50% compared to the same quarter in 2019. And so once you met that 50%, you can stay as qualifying until your gross receipts exceed 80% of the prior quarter. Regardless of size, everyone can apply for this credit, unlike the program protection loan. That one's for 500 employees or less. This can be any size. It includes nonprofits, but it does not include self-employed. And I guess I want to do a little asterisk next to that. If you're self-employed and you have employees, I think that would obviously count. It's just that if you're 100% self-employed and don't have any employees, they're saying it does not count. If your credit is greater than the tax, that counts as a payment. So say, for example, you have that one employee we talked about, 10,000 max per employee. And so it's 50% of that, which is 5,000, you can use as a credit. Well, say your total Social Security tax on the employer side and Medicare is only 3,000. Well, you still have 2,000 left over once you apply that 5,000 credit. That 2,000 left over is a refundable credit. It essentially counts as a payment towards your tax made. So what you can do to get some relief now is you can reduce your payroll deposits. So you'll have to work with your payroll provider. So you can reduce your payroll deposits for what you think is going to qualify, as opposed to paying it in and getting the credit later. Or you can do this advanced credit form 7200, which is a brand new form, and they say they'll get you your refund back within 2 weeks. And I kind of put a star on that because they said they would try in 2 weeks. So I'm not sure what try means, so. So that's the Employer Retention Cares Credit. This one is called the Payroll Protection Program. It's a loan. If you go back to your algebra days, if you ever thought, when am I going to use cubed and squared? I've been calling this the P cubed, right? That little 3 up there for the 3 Ps. This thing is a total disaster with the banks and with just everybody. But you have to consider what they're trying to pull off here. Within 1 week's time, they're trying to get, I guess they're not trying all in 1 week, but they're trying to roll out a program of $349 billion to small businesses, which is just, quite crazy. So I guess for, all things considered, they're doing pretty well. Banks started accepting applications last Friday, and some of them have stopped. I know Wells Fargo can't take any more for some reason. A lot of the banks say you have to have an account with them. Some of the smaller community type of banks seem to be a little more flexible with regards to being able to accept more people if you didn't have an account with them. So this loan is for businesses with 500 or fewer employees. And it's for sole proprietors, self-employed individuals, nonprofits, veteran organizations, independent contractors, and tribal business. So the nonprofit is a little tricky. It's definitely for 501c3s, but it's not for other organizations like a 501c6. So depending on what type of organization you are, you want to double check that. It's for cost of payroll and benefits, interest on any mortgage obligations, rent or lease agreements that have occurred prior to February 15th, and utilities that have been established prior to that date. It does not count for independent contractors as of very, very recent, like a day or two. At first they said it would count for independent contractors, and so everyone was applying that way. And they said, if you apply that way, don't worry about it, we'll figure it out later. But because independent contractors can apply for this loan too, they don't want businesses applying to pay those independent contractors, and those independent contractors, apply as well, and they get a double up on a loan. The max payroll per employee is $100K, and if you have people on that paid sick family leave, those people do not count. Payroll costs are defined as gross salary and wages benefit, commissions, tips, and net earnings from self-employment. So it's pretty much everything that you pay payroll taxes on can count. So it does not count for S-Corp distributions because S-Corp distributions are not earned income. You do not pay payroll taxes on that. So it does not count. I've had several people say, well, I've never set myself up on payroll just yet. I have an S-Corp, but I have distributions. Can I use it for that? And unfortunately, it does not count for that. The deadline to apply is June 30th, and it covers up to 8 weeks of qualified expenses. Continuing on with the payroll protection program, The max loan is 2 months average payroll plus 25%. So that's where you're getting that 2.5%. I don't know if you guys have seen that picture down on the right-hand side. I thought that was kind of funny or cute, you know. What is that? Benjamin Franklin with a mask on his face. So anyways, it's up to $10 million. You can use, this is also a confusing part that's been going back and forth. They said to use the last 12 months, and then the application said, no, use 2019 calendar year or vice versa. And it's been all over the place. And so now they say, well, use whatever one, you know. And so whatever one your bank tells you to use, you go ahead and use, or whatever one's more beneficial for you. So what they're trying to do is use the last 12 months, you know, ending this past March, 12 months prior to that, or the 2019 tax year, and then exceptions apply. So if you're a new business, you can use, you know, recent data. If you're a seasonal business, there's exceptions for that. There is a forgiveness of loan piece on here, which is a bit complicated. So we gave that to Robert. The interest rate, I think it started at 0.5% and it went up to 1% fixed rate. You have 2 years to pay this back if any of the loan is not forgiven, but it does accrue interest during this, this period of not paying it back. There's no prepayment penalty if you want to pay it off right away. There's no pledge for collateral, no personal guarantee. And so it's pretty much just on your word that you basically needed it. So you need to self-certify that the COVID-19 crisis has led the business to need the loan to continue operating. So that's kind of a big one. So I think if you're doing just fine, I don't think you'd be able to qualify for this loan. You can only file one payroll protection program loan per organization. And then you want to document everything because they're going to want to see eventually, I imagine, 941s for payroll, rent, you know, rent checks, lease agreements, all that type of stuff. And then again, just to mention, if you're doing this payroll protection program loan, you can't do the employee retention credit. A couple other changes here is the personal trust and C corporations federal and California due date of April 15th has been extended. I think you all know that. So the due date was extended and the payment date is extended to July 15th. Federal and California used to be different, and they finally got on the same page and said, okay, we're going to extend the deadline and the filing and the payment, all that stuff to July 15th. So that's pretty good. Personal federal and California 2020 Q1 and Q2 estimate tax payments are due July 15th. So not the June 15th like Q2 is usually. You take those two amounts and you lump them together for July 15th. The California FTB LLC 800 gross receipts fee, or 800 and the gross receipts fee are now due July 15th instead of April 15th and June 15th. If you've already set up, because you did your taxes a long time ago, say 2 months ago, and you have an automatic withdrawal set up, you can call the IRS and California to stop those payments up to 2 days, business days prior. So with today being the 8th, and this is going to get extremely busy, I would try to call as soon as you can if you need to stop those payments. If you use the credit card company that you can find on the IRS website to pay some of these taxes. Oh, my 15 minutes is up. I'll make this super fast. You can call that payment processor. Also, if you have the mandatory paid sick leave, family, and payroll tax credit, that is going to be treated as taxable income. Just keep that in mind. A few other things, the Treasury rebate check is to start coming tomorrow, April 9th, for it's starting at low income taxpayers first. They're going to use the direct deposit on your prior year tax return. If they have a different type of bank account and you want to enter your direct deposit, they're going to hopefully have that website up late April or early May. If you don't do the payroll protection program loan, you can defer payroll taxes up to 2 years. You can also, if you qualify, take out $100K of your IRA withdrawal, subject to tax, but not penalties, prepayment penalties, or not prepayment, but early withdrawal penalties. I would say try not to, because the market is down. You can also do a Roth conversion, which could be helpful. And then we have a ton of information on our website, the Knowledge Center, and the blog, and then also on our Facebook at Noon Associates CPAs, or our Instagram. There's a ton of information. And I think that's it. I was 1 minute and 20 over, Robert, so you can take that 1 minute and 20. But thank you guys so much, and we'll answer any questions once we're done here.
Thank
I'll
you.
yield a minute and 20.
That was
I didn't do a fancy slideshow because life has been going crazy. I think since everything started, I have been doing nothing but reading and speaking. By the way, there's a copy of the law that we're talking about. And I'll be honest, I've read every word of it.
Hey, Robert, can I interrupt you really quick? Brooke, do I need to stop sharing my screen or?
Yes.
Okay. Is that better? Everyone can see Robert now?
Yes.
We're fine.
Okay.
And yes,
Okay, sorry
I am
about that.
in my office, but I'm the only one in here in 5,000 feet. I'm going to try to be pretty matter of fact and go through some issues that I think are important. Mike covered a lot of them. Thank you, Mike. I'm going to make a comment that just needs to be made. Neither Mike or I are giving anybody any individual legal or tax or business advice. And when we answer your questions, okay, this is the lawyer in me, we're also answering it in general. We're not answering your advice. You can call Mike, you can call me, you can call your own accountant, your own attorney, but this is a general, we're trying to help you. By the way, all this act, the funny part about all of this, the only way they were able to do this is they amended the Internal Revenue Code. I'm not going to go into a whole history of myself. It's on my website. Look there. That way I can make up the minute and a half I lost, Mike. One of the things that you need to deal with is that this is a disaster that's happening with the banks. The banks don't know what to do, and at midnight, when they open the portal to put in the applications, the SBA changed the applications. So anybody that was already in line, they had to redo their applications. They have run out of money based upon the number of applications, the best they can tell. But tomorrow they're going to do a voice vote, and they expect to add another 250 billion to the application process of the money that's going to be available for the PPP loan. When you're doing your application, Mike touched on all the things that you go into the formula for the amount of money that you multiply by 2.5. You can include the employer portion of your taxes in that. And when you're looking at the benefits, most banks and the SBA have said you can also add in your workers' comp as part of your medical expenses. So when you're doing your computation to your 2.5%, you need to deal with that. Excuse me. I'm just going to go right into the forgiveness of the PPP. I guess, Mike, since you were dealing with that, I'll just go right into that. First of all, the intent is if you're really going to use this for payroll and no more than 25% for other allowable things, you get to walk away from the debt. Basically, it's an 80-day period that you have to show you use this money. I'm recommending to everybody that if you do get a loan, you put that money into a separate bank account. Call it a payroll account. So everything else you're going to pay, and this goes along with what Mike talked about, because there will be audits that start. If you put all this money into this special account, and then you use it to fund your payroll, and the rest of the money you start bringing in, you got a clean audit. It's real simple for Mike to walk in and say, here's the records that showed, you notice I have Mike doing that, not me, but here's the records to show the IRS, it all went into the payroll. I used it just what it was for. The second part of it is you have to ask for the forgiveness. It is automatic. It is not taxable. So if you're getting 2.5 times and it's forgiven, you really just, not that you're out there to make a profit, but you've just saved what would have been 20–30% of income taxes, because you will not have to pay income tax on the forgiveness. Again, keep your records. It is 100% forgivable if you go ahead and you use it for the purpose of paying taxes. Now, you have to rehire to a 90% level. There's arguments between 80 and 90. I'm arrowing on the side of where you were in February when this all started on February 15th. If you don't hire back to that level, or you use the money for things other than we're talking about, it does become a loan up to 4% interest. And I'm hearing like Mike is, everybody's saying it's 2 years. The law provides it could be up to 10 years. So that's how this is going to be handled. There's two other loans that are out there. One, this the SBA disaster loan. Well, actually, one's a loan and one's the grant. But the grant, if you get the other loan, it's applied against the, the grant gets applied against the loan proceeds. So that one you have to do directly with the SBA. That's not through your bank. I know Brooke's been real good. She's given everybody the link. We'll be able to, if you need to, the link's available. It requires a lot more work. But the interesting thing about it is you're not telling the SBA how much money you want. You just fill out the application, you submit the documents. They're supposed to contact you and tell you how much money you're eligible for. In between there, you can ask for a $10,000 grant. If you don't get the SBA loan, the grant becomes a grant and is not repaid. If, however, you deal with the SBA loan and you get it, it will be rolled in there into your loan and has to be repaid. And those loans are an SBA loan that will be, you're going to have to, again, they're not clear, but that is subject to a personal guarantee. But they're not taking liens on your property. Where the PPP loan is, there's no lien, there's no personal guarantee, there's nothing. In fact, in the law, what banks do is they can only loan to a certain percentage of debt, have debt on their, so that they're liquid. The law actually says this is considered 100% collectible, so you don't have to use that in your formula of risk. It's actually in the law. Again, the forgiveness is not taxable in the PPP loan, but you have to keep in mind that if you don't meet the criteria, you're going to have to pay it back. I'm looking at Mike and I divided this, and I'm just trying to see what I'm supposed to deal with. There's the other part which Mike was talking about, which was your payroll portion of the taxes. Now, what needs to be understood when Mike's talking about, and we've talked about payroll taxes, we are not talking about what you withheld from your client, your employees. When you withhold them from your employee, you become a trustee. And that has to be paid right away. And that's the same things with sales tax. That's money you withheld from people. All these rules are dealing with tax obligations you have. And so you can now stop, and everybody should, they got to talk to their payroll companies because nobody's come up with how they're going to do it. You can stop making your payroll tax deposits relating to the amount that you pay. That's your FICA taxes, the employer's portion. You get to pay half of that in January and half of that a year later with no penalty and interest. That's irrespective of whichever loan of these loans that you're taking.
Hey, Robert, I just wanted to point out really quick, with regards to the payroll taxes on your employees, it's very important to not for that money along that you collected from your employees, there's a huge penalty. It's called a 100% penalty that can be applied. And that penalty is really hard to get rid of. And it's applied over to your personal social security number. So be careful on using those funds to not pay.
Those are the, there's only a couple things that we can't get rid of in bankruptcy. And failure to pay over the withholding money, which then the IRS comes back and assesses as a 100% penalty, is that criteria, because you're a trustee. You're collecting them on behalf of the government.
Right.
Okay, the other thing I just want to, because I want to go over a couple other items that are important that people have talked about. If you have an FHA or any type of government-backed mortgage, as a matter of law, if you call your servicer or you call your bank, you can get 180 days and then ask for another 180 days, or actually it's 150 days and 150, and your payments will be stopped, no interest, and it will show that you are current, like you didn't miss anything. I've heard all these different comments about, well, if you take this, it's a forbearance and you're going to have to pay it back right away. No, the law says those payments will be added to the end of your loan. So here's the problem. If any of you are listening and reading news articles and things of that nature, make sure that you really read things that are coming out by attorneys or accountants that know what they're talking about. The next one, if you have an SBA loan, if you call the SBA lender, they're automatically giving 90-day forbearance and will work with you in putting the loan somewhere else, not asking for the money right away. The next one is student loans. Everybody who has a student loan should have received a letter by now saying that student loans are stopped and interest are stopped. You voluntarily can make the payments, but all payments have stopped. And again, they're going to be added to the extent they're added later on, or they may actually be totally forgiven. They're still working that out. There's two different set of rules that are coming across on that. For those that can't pay their rent, I'm talking about business rent, and this also applies to your home. Less than 24 hours ago, the California Supreme Court has issued an edict that until 90 days after the emergency is lifted, no court can begin doing any eviction or foreclosure in the state of California. That will give you 90 days after this is all over, if you get a unlawful detainer notice or a default, to clear it up after the emergency is declared. That just came out, and then there's 60 days on top of that. So we've been hearing landlords for our clients, commercial clients, that are saying, I'm coming after you and everything else. They can't do it. And that's, so if you need to not make the payment, if you can make the payment, I'm encouraging you to make your payment, but the law is you do not have to make the payment. It will still be due, but don't be worried about being kicked out of your business location. Can't happen. Brooke, how much time do I got?
Couple minutes.
Yeah,
minutes.
you have about 3 minutes.
3 minutes.
Okay. Those of you that have ADP, I would give them a call. The other, as Mike says, you have a couple different options if you don't apply or you can't get into the PPP loan. But remember, that does require more of a showing and not just a self-certification like you can do with the PPP in order to get with the payroll reduction. And again, remember, it's going to take time because it's a credit, despite the IRS saying they're going to refund the money right away. A lot of these credits will apply against your withholding or your obligation to make the payment. So make sure you understand that. So we talked about those are the key points. As I said, we could go on for hours. I wanted to hit the highlights. And Brooke, we'll leave it open to you to get questions.
Okay, thank you, Robert. We appreciate that very much.
I'm not used to sitting and not moving during these lectures. And by the way, I'm going to take 2 seconds. If anybody's listening that's not a member of the chamber, I just spent 8 years on the board. I'm in a hiatus. I don't know what will happen in a year. But I will tell you, if it wasn't for the chamber, my business, as good or bad as it is during this period of time, my business would not be where it is. So the chamber's giving all this information. It's there to help everybody. If you're not a member, please seriously get involved, join. It's really the thing that's a lifesaver through this and other times.
Thank you, Robert.
You pay me later.
We appreciate that very much. Okay, so we're going to go ahead and do the Q&A portion. If you do have a question, just please add it into the webinar chat area. We do have a couple questions. So the first one we have is on the PPP template from BOA line 7, state local taxes on employee compensation. Where do I find that on the 940 or 941?
I can take that, Robert. I think he means instead of from the BOA, I think he means from the SBA on the template. So if that's what you're referring to and you're looking for state and local income taxes, those are on the DE9, the California payroll form. So like the 941s or the 940 that you file for federal, except for California, it's on form DE9. So let me know if that answers your question.
Mike, I could add to that if I could. That also, that's the part I was talking about when you look at the 941 as it would be. Those are the portion of the taxes you're paying. That's the add-on in the mathematical formula that they're looking for. And that's your portion of the Social Security and your portion of unemployment or whatever on the state.
I mean, I guess I would say, I think it's both portions, Rob. Doesn't it multiply it by 12.4% and carries both portions over?
Well, no, but you can only put your portion in.
Yeah, okay, yeah. But the form says list both, 100%.
Yeah,
okay.
The problem is that it's included in your gross above. So that's only supposed to be
the employer portion. Okay.
Okay, the next question, line 10 says, add EIDL amount net of advance. I applied, but haven't heard anything about that. Do they want the amount applied for or the amount received?
Amount received.
Okay.
Because there's no guarantee you're going to get the other. Because if you had received it, you could put it over to the PPP, and believe it or not, that would have been included with certain exceptions, and part of that loan would have then been forgiven. But no, I don't know of anybody that's been funded on the emergency loans.
Great.
Mike, have you heard of anybody being funded yet?
No, I haven't heard anybody getting funded the disaster loans, the grant, or the PPP loan.
Okay, next question. If I filed a UI claim, does the CARES aspect automatically get rolled in, or is there a specific application for CARES?
So I think what she means by CARES is the payroll protection loan under the CARES Act. And so that is a separate application, has nothing to do with unemployment. And so you would go to your bank. They're pretty much all doing them online. So if it's Wells or Chase or whoever, you would apply there. And if you do get the payroll protection loan to pay yourself wages, then you need to stop the unemployment because you're no longer unemployed.
Oh, Brooke, if she's referring to, or I shouldn't say she, but if the question deals with the application was for unemployment, and now the $600 additional amount that's in the CARES Act, that's supposed to be applied automatically because your application's in. You won't need to apply another one. However, you got to understand there's going to be a technical correction that will be coming out because the way the bill is written, it applies, you get the normal unemployment plus $600, which is like $15 an hour. And there's several people in Congress that have looked up and said, it's cheaper for everybody to be on unemployment right now. So that's going to be a technical correction. It's supposed to have been, state of California had 511, so it was really supposed to bring people up to 600. There's some states that have a maximum of only 200. But the way it got written is it's 511 plus 600. But whatever that number is, it will be done automatically.
And then we have another question about, can you give some more information on it says SEA 10,000 loan, but I think it might be the SBA.
Yeah, so if you go, if you just Google SBA 10,000 grant, you'll get to the SBA website, and it's the Economic Injury Disaster Loan Emergency Advance. So I'm looking at it right now. Yeah, it provides up to 10,000 of economic relief to businesses that are currently experiencing temporary difficulties. This thing is supposed to fund within 10 days, or not 10 days, 3 days. I haven't heard anyone getting this amount either, but it's on the SBA.gov website.
Okay. Hey, Mike, I just got a request for the link for that.
Yeah.
Would you be able to add it into the chat?
Yeah, how do I do that?
So if you copy it and paste into the chat.
How do I chat myself?
So, so you're going to click on the chat at the bottom of your screen. And then
oh, I see. To all panelists.
Yeah, all panelists and attendees. You want to make sure you have the attendees.
Okay. Let's see. To all panelists and attendees, Command B. There you go.
Perfect. Thank you. We're all learning to go along here.
Yeah, I can see the chats. I just don't know how to chat myself.
We don't have any other questions right now, so I don't know if there's anything you both want to add.
I'm trying to think of anything else that's come up recently. I mean, I think I did mention on my PowerPoint about the, and I think Robert mentioned too, but you can defer employer taxes up to 2 years. So even not a part of any of these other programs, you can still defer your employer side of payroll taxes up to 2 years. With regards to that 100% penalty, just really want to make sure people don't get stuck in that. It's hard to say what portion you paid. Did you pay the employer portion or did you pay the employee portion? So what a lot of people will do during times like these is that they'll write a check, and then in the check, they'll put the memo, the employer portion, and really spell it out of what they're paying. Or not the employer portion, the employee portion, because that's what protects you. And really spell out what they are paying, you know, as opposed to one or the other. So it's going to be really difficult with all this automated payroll systems. You can talk to your payroll company about how you can identify specifically that you're paying the employee side of it. And I guess one more thing to mention about that, it's anybody who has a responsibility to pay. And so if you're a bookkeeper and your boss tells you to pay, don't pay the employer taxes, that penalty could be assessed on that bookkeeper because it's their responsibility to make that payment. So it's a very strict penalty, and just make sure that you're doing everything you can to get those funds paid, or refusing to not comply if that's the case, and documenting that somewhere.
a couple things. I mentioned about if you have an FHA related or any type of government-backed mortgage, that also applies to multi-family, but you don't get as long of an extension. You can get up to 3 30-day extensions, especially if your tenants aren't paying, because they're going to take use of that. You can get that forbearance automatically if it's a government-backed. Since we got a couple moments, one of the things I want to talk about is we get a lot of questions. Jenny's going to be speaking of our office later on about some employment issues and HR issues, but we're getting a lot of questions about the difference between furlough and terminating of employees. Our recommendation, and if there's any employees, forgive me, our recommendation is right now for people to terminate their employees. If you furlough them, you have a couple different things. First of all, you're going to have what we call the super, if they're employed and they then fall into the category of what we call super health insurance, which is a 10-day period that they're going to have to be continued on health, their salary, and there's other benefits. And if they're furloughed, you're going to also have the obligation to continue their health insurance. It does not apply if you terminate an employee because they're no longer your employee. The difference will need to be, and this is why there's two schools of thought. When you reopen, you're going to have to hire everybody brand new. You're going to have to do all the paperwork again to show it wasn't a falsity. You can give them priority, but again, you might want to think about making sure you terminate them so you don't get caught with having to pay money for sick leave and things you don't have the ability to do. And I know it's harsh, but we're here giving business advice, and that's what, it's a very harsh thing to deal with. The other thing is that off of this, but just as a comment, we're now hearing that we're required not only to shelter in place, but we're dealing with masks, the gathering in people and everything else. There are a lot of people out there that are laughing at this. Let me explain to you. If you're gathering in groups or you're operating your business and you're not allowed to, and I'm not going to go into all the people that can operate, but if you're doing something, understand that it is a misdemeanor. It is not a traffic ticket. When this all gets settled and you've been cited 2 or 3 times, I got to tell you, the judges are going to throw the book at you. Because basically, and this is something you have to think of as an employer, if you're not giving the employees the masks, or you're making them come to work and you don't meet the requirement, I'll tell you what's going to happen. If somebody gets sick, you're going to get sued for workers' comp. And what's going to happen, your workers' comp's going to say this was intentional and we're not covering you. And if you have an employee that unfortunately dies or is long-term disabled from this, you're going to be held liable. And that's the other item that goes beyond bankruptcy. You can't get rid of it. Real quick, by the way, they've expanded the ability to file bankruptcies. I hate to mention that. We're on our 3rd bankruptcy that's had to be filed since this started. But what's good with this, when I'm talking about the bankruptcy, you can, if you have to, you'll be able to do it quickly. There's a new law, sub 5 of chapter 11, and we'll be able to get you out. And it's very easy to keep your business, again, so don't panic over it. There's a lot of tools. We're here to help, and I'm not talking about just us, but we're here. And as Brooks knows, if somebody wants to shoot me an email, I'm sure Mike's the same. Don't expect an instant answer, but I will answer at no cost. Seriously, to help people the best I can.
Thank you,
Brooke,
Robert.
Brooke, I had a couple other things I can mention. We have any more time or?
Oh yeah, definitely. We just have a couple more questions that were sent in, so just let you know.
Okay, so I see that question with regards to the, says, if you are a 1099 and you work remotely and or from home, you don't qualify for unemployment. Yeah, so if you're fully capable to work, then you don't qualify and you're still getting paid and your hours haven't been reduced, you still qualify, or you don't qualify for unemployment. That is correct. But I wanted to go through a few things. There's a lot of planning you can do with regards to this rebate check. Because it's based on whatever return they have on file last. Sometimes if people have, so say in 2018, you added a child in 2019, you want to file 2019 really quick to get that extra $500. Or if your 2019 income is less than 2018, you want to file 2019 really quick. Or if your 19 income is higher than your 18 and it would be a reduced credit rebate check, you want to not file 19 until you get this rebate check in a couple weeks. And so we're doing that almost on every return, trying to plan which is the better case scenario. There's calculators online where you can put in your adjusted gross income and how many children you have. They're all over the place. That will tell you how much you can get. For seniors, there was a lot of discussion. Do seniors that just have Social Security, do they have to file a tax return to be able to get this CARES Act U.S. Treasury rebate check? And the answer is no. They're gonna just do it based on what they know about you from the Social Security benefits. So you don't need to file for that. Real estate taxes have not been extended. Those are still due in 3 days here, April 10th. There's talks about being able to write a letter to get out of the penalties for it. Who knows if that'll work, but they're still currently due. For payroll taxes with the EDD, you can get a deferral, or you can apply for a deferral by writing them a letter and requesting for a deferral. I wrote a blog on my, I think on our website as well as our Facebook about firing yourself. If you're self-employed S-corp owner, if your business has drastically reduced and you meet the requirements that I mentioned, you can lay off yourself and file for unemployment. So that's something else I wanted to you to know.
Mike?
On that rebate check, it's $1,200 for an individual if you're under the income thresholds, $2,400 for married, and for every child that's under 17, so not 17 but under 17, it's $500. So all those college kids hanging out at your house that are hanging out at my house right now, they don't qualify for the additional 500 booster as a child.
Mike, if I can
and I think that's about it.
Mike, if I can interrupt you on the firing of yourself, yes, you have the right to do that, but if you're going to terminate yourself, you got to terminate yourself just like you would everybody else. In other words, if you terminate your other employees and you stop paying their health insurance, make sure you do that for you. In other words, you can't be only half fired. You have to do exactly to yourself what you did to any other employee that you terminated.
Right. And make sure you take a look at the requirements that are on our blog or our website or on EDD's website.
So
we do have another question. If your financial institution is not participating in the PPP or loan SBA program, can you please let us know where to go for help?
Okay, the SBA loan program itself, other than the PPP, the first loan that we spoke about is directly with the SBA, and you'll be able to tie into that same loan application off the link that Mike posted. It should be a tie, it should be the same link. The PPP is an SBA program, but through your bank. Right now, I wish I could tell you who's doing it. Go right online. I think, Mike, you mentioned it. There's a lot of community banks that are doing it. There's a bank out of Pennsylvania. That's a small little bank that's doing it. They don't care where you come from. They're doing it. But again, that was as of midnight last night. It's just filling up the pipeline. It's too hard for them to deal with it. Basically, any of the banks that are doing SBA loans would do it. Credit unions are doing it. but they've set these artificial deadlines or closing their portals only so they can get them processed, because they have to do the underwriting and they only have so many people on staff.
Right. And if any of you guys find a bank that's doing it, or a credit union here in town or anywhere that's doing them, and you don't have to be a customer to begin with by a certain date, let us know, and then I can share that information on our social media and that type of thing.
And Brooke, you might want to talk to Paul. He may have some information on that, and maybe just send that out.
Okay. Thank you.
Paul's been a great help. He's talked to lots of people. I think he's throwing his phone away though.
I hope not. One more last quick question. You guys may have covered it, but as a sole proprietor with no employees, are they eligible for PPP?
Yes.
For PPP, yes. For the employee retention program, no.
Okay.
Yeah, but I think Mike mentioned that there's a lot of banks that are so lost of what to do for the self-employed people. They're not. A lot of the banks are shying away from it because they have so much out there. They don't know if anybody's going to directly qualify. There were actually all sorts of provisions of how much money was supposed to be given in the actual code, not the blogs and not the. There was supposed to actually be money that 2.5 times. It was actually supposed to be including your rent, including your mortgage payment, certain interest. That was all supposed to be in that formula for 2.5 times, but given discretion to the Secretary of the Treasury, and they came back and said, no, we're not going to give that. We're only going to do the payroll.
Okay.
I think we got it, Brooke.
I think so. I think that's it.
Thanks to the Chamber for doing this.
Yeah, thank you, Chamber. I know you guys are putting on a bunch more events, so thank you so much. And if any of you guys have any questions as we get closer to, well, I guess not the deadline, but as you get away from this conference here, if you have any questions, feel free to reach out to us on our website or call in.
And my email is robert@thetemecula.lawfirm.com. It's hard.
And I'll give you my email separately so you don't spam me to death. Because I think Brooke is going to post this online, right?
Yes, and I will send an email out to everyone who attended today with your contact information.
Okay.
Links and everything.
Cool.
Thank you.
Sounds good.
All right. Thank you guys very much.
All right. Thank you, everybody. Nice
Thank
chatting with you guys. All right. Bye-bye.
Bye-bye.